Hey guys, today is September 21st, 2022, and here's your mortgage market update for today. Now, this one's going to be a bit longer. There's a lot to talk about. There's a lot going on this afternoon that I want to touch on, so just bear with me. But first, as of recording, mortgage rates are 6 basis points better than close day yesterday. That's the first time I've had good news in a little while, but the 30-year fixed rate did close at 6.47% yesterday, with the 15-year average coming in at 5.78. We are seeing some improvements in the 10-year Treasury at 3.55% this morning. And we are seeing stock markets increasing about 0.5% across the board as of recording. Now, a lot of this is in anticipation of the Fed meeting this afternoon, which I'll talk about in a second. But first, I wanted to touch on two pieces of information that came out today that was some solid information, or some good news. MBA mortgage applications did rise 3.8% for the first time since early August, and that did beat analyst expectations. So that was really good news. And we did see existing home sales increase in the report released today. So some more good news. We did see an analyst beat on that as well. Now, this afternoon, the Fed is meeting and they will release their Fed fund rate decision. Markets right now are pricing in a 75 basis point increase. Now, you might wonder why, when the Fed raises its rates, the stock market doesn't plummet, right? By and large, these rate increases are baked into the markets already before the Feds actually release their decision, right? Right now, the market is expecting a 75 basis point increase. So as long as that number comes out, we shouldn't see too much additional volatility when they do release that this afternoon. Now, there is roughly a 16% chance of them raising rates by 100 basis points. Now, if we were to see that, that would be unexpected. We would likely see a negative reaction in the markets. Likewise, if for some reason, I'm not saying this is likely at all, but if they did release data that they were going to only raise rates, say 50 basis points, we would see some positive action in the markets, but that is not very likely. Again, a couple other things they're going to do today is they're going to release their summary of economic projections. Now, this is going to be where they are projecting things like unemployment, GDP, and inflation to be, in the next 3 months. And they're also going to release information regarding where they see the Fed fund rate sitting in the next, in the midterm, essentially, the next year to 3 years, I guess. And this will give some good indication of where they expect things to be, and can give us an idea of where they might be planning to stop raising rates or even start tapering off and decreasing rates in the future. Again, these are just projections, so they will be highly influenced by new economic data that comes out over time. The biggest numbers to pay attention to, guys, are inflation numbers, particularly the CPI, the Consumer Price Index. This is going to track, core inflation data points and exclude some of the things like, gasoline or stuff like that can be a little reactionary to current events, such as the war in Ukraine, the drought in China, just different things like that. But we are seeing inflation continuing to rise. We did have bad numbers out earlier this month that were worse than analysts expected, and that's why we're seeing the Fed continuing their aggressive rate increases, and that likely won't stop until we start getting inflation under control. But the problem with markets is they are reactionary, and it does take time for these increased interest rates to actually start tapering down inflation. So it's very likely, and at least in my opinion, I'm no expert by any means, but until we start seeing those numbers drop on the inflation side, the Fed will keep aggressively raising rates, but their aggressive rate increases won't be seen for some time after they actually enact them. So it's kind of one of those things. It's seesawing back and forth. Hopefully we can get it under control so we can kind of see where the market will normalize, so there's not so much uncertainty out there. But if you stuck around this long, thanks for sticking around. I know that was a lot of information. But this is why it's important to rely on experts. If you're in the market for a new home, trust your lender, trust your realtor. They're going to know how to navigate these choppy waters and get you to your end goal. So thanks for watching, and we'll see you back here tomorrow.